Hello guys and welcome back to a new video. This is gonna be an unplanned video, so I didn't plan to make this, but I was getting a lot of messages lately and I noticed that there is a common theme between all of these messages. So the messages are either people sending me questions, right, about a certain concept or a certain fraction of price action, and why this happened, why this didn't happen, or maybe trades. All right, I also see trades, people sending me their trades, and they ask me for my feedback of why I think this trade didn't work out. Okay, the thing that I noticed, and I believe that it will really help you to get better at understanding price and making your strategy works, whatever strategy you are using. I know that your strategy prints winners and losers, but understanding this, you will filter out the losers, right? You will know exactly why the winners worked out and why the losers didn't, okay? By just understanding this simple concept. Talked about it a lot in my previous videos, right? And on my NQ reviews, but I felt like I should do a separate video about it so I can refer people to it when they ask me a question, right? So whatever style you are using, whatever strategy you are using, whatever concept you are using, I believe that you're gonna agree with me that this right here is the basic and the foundation of the market, okay? So the thing that I notice a lot when people ask me and send me their charts is that, first of all, they all send me the lower time frame, so they don't send me the higher time frame. Some of them are lazy, so I have to do the work and find out how the higher time frame looks like, all right, from that lower time frame entry that they send me. But majority of them didn't send me a higher time frame chart or a screenshot because they didn't rely on the higher time frame to take that entry on the lower time frame, right? And this is not a video about how to analyze the higher time frame, okay? That's not it. So follow along with me. So again, the thing that I noticed is that they don't send me the higher time frame chart and they don't know where they are on the higher time frame. They took an entry and they don't even know where that entry is printing in the higher time frame chart. The market doesn't do a lot of things, okay? If we take a bullish example, right? Price is printing or trading to the upside. Okay. The market is either doing this or doing this or this or this or this or this or this. Okay. The market is either expanding, okay, or pulling back, expanding or pulling back, expanding or pulling back. Okay. We're not going to use some complicated tools. We're not going to use, I don't know, standard deviations to predict the exact level that price is going to reverse from here. We're not going to use or know exactly where the pullback is going to end, even though price is only here, start trading to the downside, and price is here, and we're trying to predict the reversal point here. No, we're not going to do this. We're not going to pick the top from here, right, and predict that price is gonna reverse this whole trend. I don't know if this is the daily time frame. We're gonna reverse the whole trend that has been going for I don't know, almost 3 months. Okay, this is not what we're gonna do here. The market is either expanding up in a bullish example, right, or pulling back, expanding up, or pulling back, expanding up, right, or pulling back, right? Or the market is ranging. So the first thing or the most important thing in technical analysis, right, is knowing where you are. Are you in this on the lower time frame, right? This is the higher time frame. On the lower time frame, are you in a bullish expansion leg, or are you in this? So we are pulling back on the higher time frame, or are you in this range right here? So knowing this, where you are, this is like you have done 50% or more regarding technical analysis, because by just knowing this, where you are, right, you will filter out a lot of things. For example, if you know that you are in a bullish expansion leg, again, if this is like the hourly time frame, right, this hourly move on the 1 minute, you're only gonna look for buys here, okay? So you're not gonna look for shorts. All you have to do is to find that entry pattern, that bullish signal that can let you participate in this. You remove the shorts or trying to reverse the market from your head. All you want to see is the bullish signal. Now, you determine that you are in this, you are pulling back, so you're not going to try to take longs now. All you need to do is to either maybe wait for this whole thing to end and look again for another opportunities to long, or you can look for shorts from here, right? Now here, let's say that you determined that you are inside a range, and a range is not complicated to see. It's obvious, guys. By just looking, maybe you are here, you can see that the market is sweeping. This is not closing about this, and then one more time trading all the way to here. You will see a lot of wicks. You know that you are in a ranging market, and from here you can make decisions based on that. Okay, this is not rocket science. Ranges are easy to spot. Okay, some people call them seek and destroy. They are basically ranges, okay, not seek and destroy. All right, when you give them these names, you are like preparing to lose or something like that. These are just ranges, okay? They have its own properties. Now, in ranges, you will either sit on your hands and wait to see this structure again, or maybe you're gonna prioritize shorts above here, right, and longs below here. So again, now you know where to look for shorts. So when price is here, you're not looking for longs. So you see, this is like basically half of the technical analysis. Again, when people, this is based on the experience, my experience, and what I see on your messages, right? So again, I see people send me charts and they took a short, and then immediately after, right, they will get stopped out, and immediately after they took a long. Maybe they win and then they take a short, and then one more time they take a long, right? And they always get cooked out because of this, right? You don't know where you are on the higher time frame. So what you are doing is that you will see each break, each consecutive up close candles that broke something to the left, you will see it as a bullish signal, and you will see each consecutive down close candles breaking something to the left. You see this as a short signal. So you are buying, shorting, and you don't know where you are. You can't even know whether you should hold or whether you should take only 1 hour from that trade. By just knowing where you are on the higher time frame, you have done half the work. Now, let's say for example that this right here is your entry pattern. This is a basic market structure shift, basic flip, right? This works, guys, okay? This entry pattern works. But if I give you like an assignment and I tell you that go collect all the instances where this pattern happened or occurred during a trading day on the 1 minute, you will find like, I don't know, 20, maybe 15, right? Some of them worked, some of them lost, right? let's say for example that this pattern right here, this flip pattern, happened somewhere around this right here. Okay, again, this is the 1 minute, and this structure is the 1 hour. So price was trading to the upside from here, and this pattern happened here before price tops this higher time frame high. So do you think that this right here, this level, is the ideal level to short from, where we are clearly in an expansion leg, right? Price expanding after it finished this pullback. Do you think that you should short from here? Now, obviously you will say no, right? This is obviously not the level to short from, but unfortunately most traders again don't even know where they are on the higher time frame. So they are here inside this zone and they don't know about this. They see this short and they want to take it lower, and eventually they will get cooked, right? Because obviously we are at an expansion leg to the upside, uptrend, right? And they try to reverse it. And the problem is that they don't try to reverse it. They don't even know if this is an uptrend or a downtrend, okay? They traded, they took a short because they saw this pattern right here. And there's a problem, right? There's a problem. Now suppose that you don't know where you are on the higher time frame. You don't trade, okay? If you don't know, if you can't even determine if this is an uptrend or a downtrend, you just simply stay on the side, right? Until you learn how to determine on which cycle we are. But a lot of times, a lot of instances, the trend is too obvious. The range is also too obvious, right? Now, suppose that this pattern right here, right? It happened somewhere around here, right? Here, this pattern happened here. So when price traded to the upside, right, above this high, and then it started pulling back, and this short or this bearish pattern printed here, and you know that you are in a pullback, right? Now automatically this pattern right here has a high probability of working because simply it is aligned with what the higher time frame is doing. Now suppose that this right here happened here, right? Now the probability is getting lower of working, decreased, because we are overextended on the pullback, right? And it is likely that price is gonna reverse from here, so you should not look for bearish signals. Now let's say for example we have this pattern now, right? The opposite of this. Now suppose that this pattern right here happened here, okay? So this right here at the end of the pullback, or maybe even here, right? Now this right here has automatically a high probability of working. Here also, here also, here, because we didn't really trade it above the previous high, which is the next target in an uptrend. Now here it's getting lower because price can pulse back after taking that previous high, right? Now suppose that this right here printed here, price was trading to the downside, we are still at the top of this previous range, right? And there is likely a chance of price continuing to the downside, right? So you don't take it from here, right? So this is how you can filter out the false signals of your pattern. That this pattern can also be an inverted fair value gap, for example, right? Whatever, fair value gap, breaker, right? So this looks like a breaker also, right? This is a breaker. Now, whatever you are using. Now, suppose that this pattern right here, the bearish one, happened here at the top of this range, okay? So this has a high probability of working. But if it's happened here at the bottom of this range, now it's not a good idea to short it, right? Because you are at the bottom of the range, right? And the properties of a range is we are taking highs, lows, highs, lows, highs, lows, right? So the broadening formation, right? Which is something like this. So this was a short video, but the summary of this one is don't overcomplicate things, okay? Knowing where you are on the higher time frame is half the work. If you don't know where you are on the higher time frame, you simply stay away from the market, okay, until you understand what the higher time frame is doing, on which cycle we are, right? And then reading the lower time frame, based on that you know what to look for and you know where to look for that thing, okay? So there are no charts here, okay, no examples, but I believe that you understood clearly what I want to deliver in this video. Now, if you have any questions, DM me in my Twitter account, right? Or leave a comment down below and I will answer you as soon as I can. Now, happy trading and good luck.